Nat gas and crude oil rallying today after the IEA raised its demand forecast for 2022, and WTI is on pace for its best week since mid-April. For more on where prices are going, let's bring in CNBC contributor Helima Croft. She is the managing director, head of global commodity strategy at RBC Capital Markets. Helima, you know what strikes me are the warnings across Europe about conserving energy. Saving 1 kilowatt hour now means one more that you'll have in the wintertime. Where are energy prices headed in your view?
I mean, I think we have to be very, very concerned about what happens, I would say, in the last month of this year, because that's when these European sanctions on Russian oil are set to kick in, which would not only mean that you have 2 million barrels of Russian oil that can't go into Europe, but if these shipping and insurance sanctions actually take effect as well, it's going to be very hard to move those barrels to Asia as well. So you could be talking about a multi-million barrel Russian disruption come December 5. Now, the U.S. government is working with the Europeans on a potential price cap solution that would potentially allow those barrels to move to refiners like Reliance if they certify that they're discounted barrels. But it's not clear they can get this mechanism up and running by December. So I think a lot of market participants are saying, well, Russian production has actually remained quite elevated. India and China is taking the product. The worst is behind us. But I would say we have not yet seen really significant Russian sanctions on energy. Those are coming in December.
Helima, a lot of people think global slowdown stands to reason crude oil should go lower, but the supply-demand fundamentals are still completely out of whack. And we're talking about demand levels we haven't seen since pre-COVID, with supply that's just not there. The price should be higher, and I think we're starting to see it over the last couple days.
Well, I think macro funds were particularly concerned about recession, but we have not seen any signs of wholesale demand destruction. Yes, China is soft, but we have not seen a significant fall off, for example, in gasoline demand here. And so the question is, do you have enough supply? Again, as I look out at the back half of the last quarter of this year, we're going to have this SPR release, this million barrel a day U.S. SPR release, that winds down in October. These Russia energy sanctions, they hit in December. OPEC does not have additional barrels to put on the market to plug this type of gap. And so I do think that we should be particularly focused on what happens with these sanctions when the U.S. SPR release winds down.
So how do you think about the situation in terms of where gas prices go, where oil prices go, and whether or not the Europeans will actually have the stomach to stick by these sanctions in the dead of winter, when already they're worried about conserving energy?
Melissa, that is the top question. Will Europe have the stomach to see these sanctions through? The Russians have every intention to make this as painful for Europe as possible. So what do? They turn off the gas. Gas is not the revenue earner for Russia that oil is. Gas is the weapon of choice. There is no easy replacement product for Russian piped natural gas into Europe. That's why they're not sanctioning natural gas. But that's what the Russians are doing. They are cutting gas flows into Europe, forcing Europeans to have to think about heating and eating, who suffers in terms of industrial curtailment, because it's going to be a really difficult supply situation in Europe, especially if it's a cold winter. So that's what the Russians are saying. How much do you want to support Ukraine, Europe? Are you willing to risk massive economic dislocation to do so?
All right, Helima, we got to let you go. Thank you so much. Always great to get your thoughts, Helima Croft. All right, so industrial curtailment, that's what I sort of focus in on when those words cross Halima's lips. Julie, how do you think about that? I mean, that's sort of the factor that I don't think many people are pricing into the markets and companies' exposure to Europe.
Yeah, I would agree. I think having companies that have a lot of exposure to Europe is pretty risky. There are different pockets that you can be in. You know, I think of a company like Bentley Systems, which does infrastructure software, and they have a certain amount of business that's in Europe. That's kind of mission critical software. I don't think that's going to be a problem. But if I think about other types of businesses that are particularly on the consumer discretionary side, I think they're going to have a very, very hard time. I think we're all underestimating the level of dislocation this is going to be, because it's just so hard to replace those gas stores.
Yeah, I would just say this about industrial curtailment. To me, that speaks to slower growth, and it also means to weakening margins. And you put those things together, I mean, we can all kind of guess that Europe is going to be in. We can debate about a recession here in the U.S. It really doesn't matter. We know that what's going on there. And I would just say this, is that the issues about these sort of sanctions on Russian oil, I mean, they're not going to change. I don't think it's going to break the will from an economic standpoint. This is the future of Europe. It's the future of NATO versus this power that does have this control. I think what they realize is that they made a huge mistake, the reliance on Russian gas, and that has to change. If they back down this winter, I think that they set themselves back in their initiatives to kind of like stay the course. So to me, I don't think that's changing anytime soon, and I just think that what does a European recession mean for the rest of the world right now? We know that Chinese growth is not particularly great, and ours is going to be below the 2.2% we were averaging in GDP prior to the pandemic for some time. So global growth is the thing that's not coming back anytime soon.